Hello and welcome. My name is Martin Jones, which I'm guessing you know by now because I presented to you to camera on the first half hour. This is the second half hour of bookkeeping. So bookkeeping is at level 2, AAT level 2, and it is my job now to present on the second bookkeeping subject. The first one was bookkeeping transactions, and ready for me on a file just behind this screen is bookkeeping controls, which I'll show you in a second. But just let me reinforce the brands. My name is Martin Jones, and this is the LSBF, the London School of Business and Finance. And this is, as you can see, LSBF TV, and we are presenting on AAT. And here I go, mini-me, into the corner. And there you see reference to bookkeeping controls and indeed the time of day, just to make sure I'm doing the right thing at the right time. Reference to task 4. Now this task that I'm going to perform here is from a past examination. The bookkeeping examination is very nicely divided between 10 tasks. The bookkeeping examinations are both divided into 10 tasks, and this is the 2016 exam. The 2016 exam has been turned into an electronic online mock at the AAT, and I do recommend that you use your My AAT to log into AAT and access the level 2 materials to take a look at the examiner's answers, the examiner's comments, and probably most important of all, get used to the electronic submission of the process of doing an AAT examination. Really, really useful. But it's my job today to present not so much on the electronic process, but on the technical content. And as mentioned to camera just a moment ago, the two bookkeeping papers overlap enormously. They're very closely related. And this one's called Bookkeeping Controls and asks us to do a little bit of transaction recording, to be frank with you. And therefore there's an awful lot of crossover between bookkeeping transactions and bookkeeping controls. If you're thinking of doing these two together, I would heartily concur with that conclusion. Studying one will help you with the other. Really, really complementary. Anyway, that's enough chat from me. Let's have a little look at this fella. We're going to do an A, and that's it. Yes, indeed. So let me get my cheat notes in front of me just to make it that bit easier for me. In fact, I have my cheat notes in front of me. Gosh, wonderful. So what I need to do is to answer the requirement. Here we go. This is a summary of the transactions to be recorded in the VAT control account in June. Show whether each transaction will be a debit or credit entry in the VAT control account. You know, this is level 2, and therefore you might be looking at this and thinking it should be dead easy, but I'm not so sure it is. I mentioned this to camera last week when I was presenting on the bookkeeping controls question that I was doing in that session. And I think one of the things that might be nice to hear from me as a bookkeeping expert, as a financial reporting expert, is this stuff isn't that easy. I realize it's quite fundamental and it is just, you know, bookkeeping, but still it's not easy. See how you get on. Basically, once you get the first one, they start to flow. And again, just to be a little bit careful, I don't run out of time. I'll make sure that I rattle through these relatively quickly, and then I'll go back through them again just to make sure that, you know, you understand all the details. But I've got to be careful to make sure that I, you know, don't run out of time. So I'm going to rattle through it fairly quickly, first time. Show whether each transaction will be a debit or credit entry in the VAT control account. that is a really tricky start, actually. I don't even want to start with that. So I'm gonna start by looking to camera and talking to you about VAT in general. So what happens with VAT, if you can just watch me and you can just be an observer, what I have over here is me, and over on my left hand side I have customers, and on my right hand side I have the VAT authorities, Her Majesty's Customs and Excise. What happens is I supply goods to my customer and then I invoice my customer. I supply an invoice at the same time. Now, what I am going to do for the government is to put some tax on their consumption and then pass that tax to the government. Should we just do that again? Because that's the idea of VAT. I'm not paying the VAT, they're paying the VAT, and the government are collected. It's nothing to do with me, I'm just the agent in between. But what the government want is some help with collecting this money. So it's their money that I'm going to collect from, you know, their customers, the retail public, the buying public. What's going to happen is these guys are going to pay the Customs and Excise, they're going to pay the government. These guys, the customers, are going to pay the government, but I'm going to be stuck in the middle, actually being the vehicle by which the tax is collected. All right. So the classic relationship, if I can just turn my back on my customers for a second and look at the inland revenue, is because I've collected money from these guys, I owe it to this guy. All right. So I owe to the Customs and Excise Authority. So I owe the VAT, and that's the usual situation. I owe the VAT authorities. So I collect money and I pass it on to the inland revenue, but there's a time delay because I'm having sales all of the time, but I'm passing on VAT once a quarter it is, passing on once a quarter. So at any measurement point, most measurement points, I am in a relationship where I owe them because I've collected the money for the government, but haven't passed it on yet. So I have a creditor relationship with the VAT authorities in most circumstances, most of the time. And using the language of this process, I owe VAT to the authorities. I owe VAT to the authorities. To the authorities. We're ready to do the question now. Yeah, nasty one to start with. You can see my shoulders are kind of slumped a little bit here, and that's because it is a nasty one to start with. Look at that, VAT owing from the revenue and customs. What can happen, you see, is, you know, you can overpay them and then therefore they have to pay you back. All sorts of funny things can happen in business life, and although it is actually very rare that you have an overpayment, you pay them too much and then they have to pay you back. It does happen, and it's happened in this story here. I'm not really sure why the examiners have examined this, because it seems like examining a useless detail, but it is true that the usual relationship between me and the government is reversed. I don't know exactly why it is that VAT is owing from the Customs and Excise, but it is owing from them. So, you know, if that's the way it is, then that's the way it is. If it's owing from them, then they owe me. Now, perhaps I should use the language of debtors and creditors. So normally I owe them, and therefore I have a creditor to the government. Normally I owe them, and therefore I have a creditor. And when I have a creditor, I record a credit balance. But this is the opposite way around. They owe me, and therefore I have a debtor. And when I have a debtor, I recognize a debit balance. In fact, it is a debit balance brought down. And that means I need a lovely big fat green tick in the debit side. And we're off, kind of. But even though this is a debit balance that we start with, I still want you to think of the usual situation, which is the usual situation is we collect the tax and then we pay it on to the VAT authorities, and therefore after we've collected the tax but before we've passed it on, we have a creditor relationship with the VAT, and that will really help you to get going. So now I'm hoping I can rattle through these. Now I've got over the first one, which is very tricky. The VAT in the sales day book. So what we do is we supply these things called products to these people called our customers, and when we send out the invoices, we collect the VAT at that point. We recognize the VAT at that point. So we've sent out an invoice, we've collected the VAT, so we're in the situation of owing those guys. So that's a credit balance. We have sold to them. Let's just go for it this way. It's a bit dodgy. We have sold to them. And let's put in this step. I think it'd be easier for you. Gosh, it's not easy this. We have sold to them and they have paid us. It's a bit of a lie, but let's go with it. We have sold to them and they have paid us, and therefore we've collected the VAT already on behalf of the government. The net is ours and we get to keep it, but this figure of 5820 is just what we have collected on behalf of the government, and therefore we now owe it to the government, and it is a credit balance because we owe it because it's a creditor. And then we start to flip backwards and forwards based on that tick. VAT total in the sales returns day book. Whoa, 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 whoa. So what has happened now is that we have sent goods back to the customer. When we send goods back to the customer, then we have already paid the VAT man. Sales return day book. Sorry, I do apologise. Goodness me, my apologies. Sales. We have sold to them and they have sent them back. So we have unsold what we thought we'd sold. So therefore, some of the money that we thought that we owed to the VAT, we now unowe to the VAT. It's the opposite way round. I think I'm just going to have to say that for now and come back to it, otherwise I'm going to run out of time. Total in the purchase day book. Purchase day book and the sales day book are opposites. I'm just going to go for that now. We'll talk about more in detail as we come back to it. VAT total in the discounts allowed day book. When you allow a discount, you allow a discount to your customer, and therefore you reduce the sales value. When you reduce the sales value, you reduce the amount of VAT that you collect. When you reduce the amount of VAT that you collect, you reduce the amount of VAT that you owe. When you reduce the amount of VAT that you owe, you reduce your creditor. When you reduce your creditor, you debit your creditor. Gosh, yeah, you can see that this thing needs practicing a couple of times so you can do it really quickly. To be honest with you, once you get into the groove of this, I could actually just tick through this instantly. There's a little bit of thinking, which one discounts allowed, discounts given, that sort of thing. So even I would have to think about it a little bit. But once you've practiced this enough, it does become far more instantaneous. But it is strange. VAT is strange because we're sitting as agent between the government and our customers. And as you can see, there's also this thing about, output VAT and input VAT. There's plenty going on. VAT total in the discounts received day book. So maybe I've got my suppliers over here. So when the discounts received day book is reducing the amount of purchases. So if the discounts received day book is reducing the amount of purchases, it does the opposite of purchases. So we get over here, opposite of purchases. VAT total in the cash book for cash sales. Cash sales are still sales, and therefore you do the same as the sales day book. And then finally at the bottom, we have VAT refund received from the HM revenue and customs. Can I just show you that these figures don't quite fit on the board without changing the scale very slightly? Well, that didn't work very well. Just let me do that again. Oh, what's happened there? It's just disappeared. That is a bit scary. I think that's because it isn't recorded on the top. Just give me a second. Sorry about that, guys. It just disappeared for a second there. Hey, what the heck? It's such a challenge, this question. Maybe we'll start again from the beginning. So, how am I doing for time? I've still got plenty of time. So, I'm sitting in the middle between the customers and the VAT. And what I do is I collect VAT on behalf of the government. They give me money and I pass it on to the government, but there's a delay in the time. So, when they give me money and I pay it on to the government, I am in a neutral position. When they give me money and I haven't yet paid the government, I still owe the government. When they have given me money and I haven't paid on, then I am in a relationship with the government where I owe them and they're a creditor. So the classic VAT balance brought down is a credit balance where I owe them. So there is a balance owing to the authorities. And when there is a balance owing to the authorities, we have a credit balance. However, you can see from the language of the first line that for reasons that are not explained, they owe me, which is a bit freaky. Well, they owe me, and then they, let's have nice green. They owe me, and then they pay me. Do you see that? So that, I mean, that's pretty instantaneous, isn't it? So it says that VAT is owing from the HM. I know it's a bit weird, isn't it? So something's happened where I have overpaid VAT in the past and I want it back from the customs and excise, and then they give it back. So using the more standard language of finance reporting, first of all I have a receivable, and then the receivable pays me and clears the balance. So those two are on opposite sides. And then all the rest of them in between are just driving off the basic idea that what I do with VAT is I collect money from the customers and I pass it on to the VAT. So when I make a sale, they give me cash, some of which is mine and I keep, but some of which I need to pass to the government. So I haven't passed it to the government yet, so I owe the government. So I'll just do that one again. When I make a sale to the customer gives me money, and when the customer gives me money, some of that money is mine and I keep it, but some of the money belongs to the government, so I pay it on to the government. Before I've paid it on to the government, I owe the government, it's a credit balance for the 5820. The VAT in the sales returns day book is reverse sales, so it has the opposite sign. The VAT in the purchases day book, paid purchases are the opposite to sales, so it has the opposite sign to sales. The total in the discounts allowed, we'll use the word allowed to work out that this is a relationship with our customers. If we are allowing our customers a discount, then we are reducing the invoice that we're sending them. If we're reducing the invoice that we're sending them, then it is the opposite of a sale, so it's on the opposite side. And then continuing on, total on the discounts received day book. So discounts received are received from our suppliers. So when you receive a discount, it's related to your supplier relationship. And if you get a discount received, it means that you are paying the suppliers less money. If you're paying the suppliers less money, it's the opposite of a purchase. It's a reduction to a purchase. So that goes on the opposite side to the purchases. And the total in the cash book for cash sales is more sales, which gives us a final tick equivalent to sales. Oh my goodness me, I just need a coffee, which I don't have. Just looking at the chat, just seeing if there's any questions. So let's start making connections here. Owing from. Bit of reg we have. They owe us. Oops, a bit close. They owe us. Therefore, it's a debtor. VAT total in the sales day book. Now, I think now is the time to introduce that tricky idea. The point at which we owe the inland revenue is not actually, the point at which we owe the HM Customs and Excise, the point at which we owe the authorities is the point at which we deliver to them, the invoice point as it's known, the point of delivery. So we actually owe before they've paid. So what we do, for example, if we invoice a net of 100, is we invoice 120 and then they become a receivable, our customer becomes a receivable, but we instantly owe the 20 to the Customs and Excise. So we end up in a quite complex relationship where the customer owes us the total of 120 and we owe 20 to the authorities. So the point at which we recognise our VAT liability is not actually the point at which the customer pays, but the point at which we deliver the goods. And total in the sales day book is actually a reference to credit sales. So we have delivered the goods, put an invoice out with a VAT balance on it. For example, we've said the net is 100, the VAT is 20, and therefore the total is 120. You owe us 120. We owe the 20 to the authorities at the point that we send out the invoice. So the goods have been delivered. So we owe the authorities, and therefore it is a creditor. How am I doing for time? Still doing good for time. And then really, I have to say to you that that opening balance of 2055 is a bit of a red herring, as you might say. It's not a good number to drive off. Really, the tick to drive off is this baby here. So we've got that baby there, and you basically just make everything relate to that. So maybe I'll just change colour so that I can really groove now. Green's probably a bit pathetic. Let's go blue. So this one here is opposite. The purchase day book, this one here is opposite. The VAT in the discounts allowed is a reduction to our selling, so it's the opposite of sales, so it's an opposite. So these guys here, these are all opposites. These are all opposites. The VAT total in the discount received day book. So you get when you get a discount from your supplier, it's called a discount received, and you pay your supplier less. So it's a reduction to your purchase. You pay your supplier less, it's a reduction to your purchase. So this pair are opposites now. That's opposites there. Would be the way that I would go for that. VAT total in the cash book for cash sales. Now, cash sales, as I mentioned earlier, is the name for the remittances received instantly and the goods go out at the same time. VAT liability is recognised at the point that the goods go out. So the goods have gone out in the cash sales. So these two are the same. If I can just make that connection there. I don't know if that's working for you. There we go. These two are the... no, let me do that again. Cash sales. Yeah, cash sales. There we go. These two are the same. And we had that already, that beginning point, so I'll just highlight that in a different colour. Is orange a bit too shocking? Let's try that. So that and that are a pair independent. Great. A lot of colour there. Challenging thing, I said it at the beginning. Actually, once you get into the groove of doing this and you start to really understand the agency relationship that you have between your customers and the VAT authorities, and that you're just collecting VAT on behalf of the government. Once you get into this idea, this is not impossible, but it requires a bit of practice so you can do it quickly in the exam. So what I would suggest is do this question, which has been taken from the AAT website. Do this question over and over again until it becomes easy. It is guaranteed that you'll get a question like this in the examination. And if you've done this question over and over again and something very similar comes up, you should have no trouble and be able to do it quickly. I'm going to go big head now and wish you good luck with your studies. So thank you very much indeed for listening to me for the last half hour, indeed for the half hour before that. I wish you very good luck with your AAT studies and look forward to seeing you soon, either next week or on a higher level. See you soon. Thank you.